Now, as capital seeks new opportunities and investors navigate a complex environment, understanding where money is flowing has never been more important. Our next discussion is titled Public Markets, Private Bets, Where is Smart Money Actually Going? And with a very warm round of applause, let's welcome our formidable lineup of speakers for the next session, ladies and gentlemen. First up, our very first panelist is someone who comes with a deep experience in professional services and advisory. He's someone who's been closely involved in shaping conversations around business transformation, governance, and India's growth landscape. Let's welcome the chairperson of PwC in India, Mr. Sanjeev Krishan. Thank you, Mr. Krishan, for joining us. Please keep the applause going, as joining him onto this panel is a respected voice in India's capital markets. He brings deep insight into investments, market trends, and long-term wealth creation. Managing Director of Kotak Mahindra Asset Management, Mr. Nilesh Shah. A very warm welcome, Mr. Shah. Joining them on the panel is someone who's helped shape India's entrepreneurial and investment ecosystem while building Avendus into a leading financial services firm. Let's welcome co-founder and Executive Vice Chairman of Avendus, Mr. Ranu Vohra. And to masterfully steer this conversation and draw the best out of the panelists, ladies and gentlemen, let's welcome the moderator for the session, Executive Editor, Political Economy, NDTV Network, Ms. Gaurie Dwivedi. A very warm welcome once again. Over to you, Ms. Gaurie.
Thank you for that. Thank you so much for having me here. It's a fantastic discussion and some very important set of voices that are really reshaping and shaping the discourse. Going into this discussion yesterday evening, I had prepared a long list of questions and an idea about how we need to structure this. But then came Donald Trump and his set of announcements. And in the morning, through the course of the morning, everything that we knew about the state of the economy, the state of the world economy, markets, how capital is going to flow, all that has completely changed. And I think this is probably the most fantastic set of people to help us decode just that. That after the announcements that I've made, after a certain amount of war overhang that was really sort of having a huge impact on the world economy, on India as well, on our exchange rate, how does that now change? How does that get lifted? And more importantly, how does global capital now view India after the changes that I've made? In fact, also a great day to have Mr. Nilesh Shah here. I mean, I saw the way markets reacted and gave a huge thumbs up in the morning. So let me first start with you and then get in the other two experts as well to really talk about which way is capital headed and how much of that is coming to India. Mr. Shah, let me start with you.
So a couple of points. First, thank you, Mind, for having me over here. We have been told that FPIs are leaving India. They have taken out about $150 billion and invested about $100 billion. There are 100-odd companies in which FPI investment is at all-time high level. So they are selling some and they are buying many more. Second, out of the net $50 billion investment which has been taken out, we don't know how many of that belongs to high-frequency traders. On 29th May 2026, there was MSCI India rebalancing. It was the highest ever turnover on NSE at about 3 lakh crore rounded off. 70% was contributed by FPI. Their normal contribution is 15 to 20%. Based on the rebalancing, they should have taken out 8,500 crore. They took out 20,000 crore. Our belief is that substantial portion of that is high frequency traders. Why do we allow high frequency traders to operate in India and take so much money out? That's a question we need to ask. Second, let's come to foreign direct investment. We have been told that last year our net FDI was zero. Our net FDI this year was about 7 billion. Again, the gross FDI which India is getting is roughly about 5% of global flows, substantially higher than our share in global GDP. It's the net FDI which has been going out. Now, look at a company like Prudential PLC. They put 50 crore in ICICI Prudential Mutual Fund in 1997. They collect 1,000 crore by way of dividend every year. And their market value of that 50 crore is 70,000 crore. How many in this audience knew about this story? None. We don't market our successes. And final point, we have been told that India is current account deficit country and hence we need global investment. Well, India is actually a current account surplus economy. In last 8 years, the current account deficit combined is $251 billion. Our import of gold, and presuming no one eats gold, is $353 billion. We had $102 billion of surplus which we have exported to the world because we are current account surplus. Now, in this context of letting people walk out with money, and in China, HFTs can't have co-location. In many countries, they have trade to order ratio. In India, Atithi Devo Bhava. We don't market our success stories which will excite other people to bring more money. And finally, we don't allocate our savings appropriately. Put together, we are where we are today.
I'm going to ask you as to how we do this better in just a bit, but let me close the loop on why today is probably one of the most significant days to be having this conversation about capital markets and also, of course, about how do we get now the lion's share of global capital. Your first thoughts, then I get in Mr. Vohra as well as Mr. Krishan, on the bit about where do we now go from here with the major inflection point or the uncertainty with regard to global economy coming to an end, or if not to an end, at least reducing significantly its impact in terms of our more capital coming in, its impact in terms of our rupee, and also the fact that we have greater visibility with regard to our energy security, which is such a huge and important aspect of the Indian economy and the state of our play.
Learn from Elon Musk. He marketed SpaceX IPO by connecting to investors. We need to figure out how to tell our story better. Long back, India came out with Incredible India campaign to attract tourists. Time has come to launch a campaign, Inevitable India. If you haven't invested in India, you are missing something.
That's a great slogan, Inevitable India. You got to be here. If you're not here, you're really losing out.
Credit doesn't come to me. Credit goes to Navneet Minot, CEO of HDFC Mutual Fund. He had made this statement. I'm just echoing him.
Perfect. All right. Mr. Krishan, then let me bring you in on there's been a fair bit of important set of policy interventions that have also happened with regard to LTCG, also with regard to how India is looking at retaining global capital, making efforts to ensure that we plug the gaps as we've been pointing out. How do we stop that? And also the regulatory interventions that have happened. Is there more that needs to be done in that direction?
Oh, certainly. I think there's more that we can do. I think, first of all, I agree with everything that Nilesh Bhai said. But, I mean, we can even become better. I mean, we unfortunately at times there are, you can call them regulatory interventions or whatever, but we shoot ourselves in the foot. Like, the whole Tiger judgment which came along some time back. Everything, we all know that investors are looking at certainty. And we are talking about that being the cause for capital to stay. Now, if if you were to tell investors that the tax rate is not going to change over a 7 to 10 year period, as opposed to subjecting them to a tiger kind of a judgment, I think there we are talking about two very different paradigms. I mean, today we're talking about interventions today. I mean, there has been this huge issue about whether the long-term capital gains tax rate that we are actually having for foreign investors is that the appropriate one, considering that it is higher than most other jurisdictions. Now, the other piece is that one has to acknowledge that there is a significant depreciation of the Indian rupee. The question then is that should we be actually computing the capital gains tax in dollar terms and then maybe converting to rupees so that, there is not a double whammy, so to speak. So I think from a regulatory standpoint, there are multiple factors.
Has that been clarified, or are those still, aspects that sort of need to be looped in by the government?
Need to be, I mean, those are areas which we hope will be looked at some point in time. I will also say, to the point that I started by saying, we do advance pricing arrangements, right? For, because transfer pricing, because all these tech companies are there. Why don't we do something similar for, let's say, financial investors as well? Do APAs for financial investors. It just gives them certainty that nothing is going to change and I can come in and like now, for instance, at least on the bond side, on the GSEC side, there has been some I think and very progressive. I think very progressive, very looking forward kind of announcements that have been made. I do think that there is on the equity side also, because there is significant pressure on the dollar and everything is linked. Like, for instance, just to give a point of view, if more and more money comes into Indian GSECs, the yields go down. The yields go down. That effectively means that the rate of interest in India can go down. So we don't possibly, the cost of lending in India will also be a bit lower. So there are multiple effects. There are all of this is interlinked in some way. So I do believe that there is more that can be done, and I think we are doing okay, as Nilesh Bhai said. More can be done, in my view, to make India even a more desirable foreign investment destination.
Mr. Vohra, your thoughts on the recent developments that have happened, and also on some of the other aspects pointed out by both Mr. Krishnan and Mr. Shah with regard to the exchange rate, our rupee, what can be done there, and how much of that weighs in when foreign capital looks at India, and also the regulatory landscape.
First of all, thank you to Mine, and as always, have had some really engaging conversations here. I broadly agree with what Nilesh Bhai and Sanjeev mentioned on how India is. I have kind of let me put the picture, because I spent some time in the US over the last few weeks talking to investors. So first of all, we have to believe that we are not the center of the universe, right? We are also, pardon me for saying that, not an inevitable country. We are a part of a bouquet. For me, 15 years back, India was part of a bouquet. Today also it is part of a bouquet. That bouquet changes. It used to be BRICS at one point of time. It was emerging markets at one point of time. We are getting mainstream, don't get me wrong, but I think what I noticed this time is people are indifferent towards investing in India.
Why is that so? Why are people indifferent to investing in India?
People are indifferent from investing in India because it has taken way too long for them to realize the returns, right? Very often, for instance, the Prudential investment which you spoke about has happened over multiple generations of CEOs, probably at Prudential end. So I don't know who's, the story needs to be told in a better way. I mean, you're absolutely right. It is a 1,000+ kind of times multiplication of value, but it has seen several cycles. So the fact that India needs longer term kind of investment, it needs to be told to people. The thing which attracts people towards India today, I was surprised, is IPL franchises. And I asked one investor, I said, of all the things you talked about, why IPL franchises are so... He said, it's an AI-proof business. Whatever happens in AI, people will continue to watch cricket, play cricket, kind of. So I said, okay. And of course, if you look at how much return IPL franchises have made for the original owners, the answer will become clear. Some of these franchises were available for a couple of 100 crores, if at all, and now are going into billions of dollars over a 10-12 year period. So we have to make an example of some of the better performing stories in this country, whether it is Prudential, as Nilesh Bhai said, or it is the IPL franchises. India is never, in my mind, can never be looked at as a generic market. it can never be looked at by foreign investors as it is a combination of a few things. It's a combination of states, languages, cultures. It has to be looked at like that. And a lot of countries are unable to kind of get their handle around that. Second thing is, you asked about rupee and dollar. I think it's a handicap, but it's a very, very predictable, known handicap. No one is coming into it saying, oh my God, your currency is depreciated by like 30%. We've had cases, I mean, for instance, a classic case in point is countries like either Turkey or you take South Africa. Investors are genuinely worried. However much they've invested, their best hope is to get the same amount of money back in dollars after 10 or 20 years.
But let me come in there. Isn't that the whole mindset that when people come to invest in India, they're not comparing themselves to their returns in South Africa. They are comparing their returns to probably the best in the world. Isn't that the whole mindset about a global capital? Isn't that what smart money or smart investors are all about?
It is fungible.
And we should be chasing them.
It is fungible. They have the option of investing in any other country. But to them today, Indonesia or South Africa or Turkey or any of these countries, there is a point when they start looking attractive, not for size reasons. See, the thing we've always sold about the country is the denominator. Oh, we are a country of 140 crore people. We have so many middle class families. We have always talked about the denominator. But what the Korea and Taiwan example have told you now is that you need the numerator. You need spiky companies. You need companies which can make you excited. You have to have companies which are the center of the universe. That attracts capital. And to me, capital is today has options. Whether it is South Africa, whether it is India, they care about the returns. Rupee dollar is in my mind, a very, very minor kind of a
that's a very important point you made, that one needn't just fret over our currency so much, because investors are smart, global capital is smart, they know how to invest, and they keep that margin and that exchange rate in as a factor when they make those investments. Let me then ask about, you mentioned how businesses are now looking at AI proof areas. What about India? Which are those sectors that I wouldn't say AI proof, because India is also embracing AI. India can also play a very major role as far as AI is concerned. But which are those sectors, those industries, those companies that you think are really going to be the darlings of global capital, and where you would, of course, be also looking at?
So one, apart from what Ranu mentioned and what you asked, investors want return. But that return carries a large portion of risk premium. And today, whether we like it or not, because of what Sanjeev mentioned in terms of Tiger Global kind of thing, the risk premium is increased. If we start respecting global capital through consistent policies, whether it is related to taxation or business, the risk premium will come down and we'll be able to get more flows. Now, which sector? Well, India is a rising tide. There's no other country who has 1.45 billion consumers where you are allowed to enter. In China, you can enter, but how will you exit? And everyone knows that. So, we are a rising tide. If we provide respect to global capital through consistent policies, I think money will flow in whichever sector we want. There is excess capital globally, but we need to respect it.
Any specific reforms? You mentioned that those uncertainties, the regulatory loopholes, you mentioned about that. Anything specific that would be there for you to look at from here on, the next phase for India as we attract capital? And then I get in Sanjeev on the other aspects.
So undoubtedly, policies make a big difference to the way we invest. For example, at today's crossroad, where the Middle Eastern crisis did create uncertainty and volatility for us, we think government should focus on energy independence, and that can be achieved through solar rooftop, thermal and nuclear. And after producing that energy, we need to ensure that it is deployed correctly. We move from petrol, diesel to electric and hybrid. We move from LPG to PNG and induction. And more importantly, we don't end up creating another supply chain challenge by depending upon China for rare earth, or we end up creating a health issue where induction still needs to be managed for health hazard. So it's a comprehensive thing which is required from energy independence point of view. The biggest benefit of this crisis will be if we pursue energy independence. And then depending upon how government rolls out policies and how it gets executed on ground, investors will start committing capital.
I think that's a very important point with regard to energy security for a country that imports about 88% of its energy needs. I think energy security is the single biggest aspect that can have us have a long arc, draw a long arc in terms of our growth potential. I want to come in and ask about the FII bit about it, foreign institutional investors. When you start having prime time debates about why FIIs are pulling out money, that is something, that's a conversation we started having. That just tells you that how much of that is getting attention. I want to first understand from you, are we getting the overall trend right? If that isn't the case, then why so? And if we are getting the trend right about, foreign institutional investors actually pulling out money, what can be done? We've done the first bit that we've spoken about, the LTCG bit. Is that enough? If not, how should then we be looking at?
I think there are two parts. I think one is something which is going to create the right sentiment and the right environment and the certainty for them, and which will build the confidence that they can continue to invest in India, and they can, what they've experienced in India over the last 5 years, 7 years, that will continue. I think the fact that somehow today they believe that because of currency exposure or otherwise, we are possibly, and we are not part of any of the big value chains. We are not part of the AI value chain. We're not a part of the semiconductor value chain in a big way, which is where currently the money seems to be going. I mean, the money which has gone to South Korea or Vietnam, or even for that matter Taiwan, which is FII money, is really gone because they believe that they are a bigger part of the AI value chain, etc. So value creation is going to be there. And as Nilesh Bhai said, some of these possibly are near-term investors. So I think that's the one part of it, which is the confidence building, which has to be there. I think the second part, and coming back to Ranu's point, and I completely agree, somewhere at the end of the day, it is all about how do we economically start doing much more better and in a more resilient way. So I'll pick up two examples. For instance, we have been celebrating FTAs in a very big way. But let me give you a statistics. Our FTA utilization is only 20 to 25%. Only 20 to 25%. In the developed country, it is about 75 to 80%. Even in what we will call semi-developed countries, or maybe countries which we possibly would want to see otherwise below us, the utilization on FTA is 45 to 50%. So, I think it's great that we have done all these FTAs, etc., and possibly more is in the offing, etc. The EU one is in the offing, the US one, something will happen hopefully soon. But can we monetize FTAs, and can we do all the legwork to make sure that Indian industry in a very inclusive way, whether it is on the semiconductor side, whether it is on the energy side, whether it is on the pharma side, because all of these sectors are very significantly import dependent, can leverage FTAs. I think that's one of the things. The other piece, just to supplement it, is because we talk about demand generation, and there has been a big concern that with SaaSocalypse, will the Indian IT industry reinvent itself? And I think that's where the big focus ought to be in a very significant way on making sure that our business models are reject, for which upskilling of a demographic profile is extremely, extremely important. I have to say it won't happen by the apprentice scheme that we have come up with. I think it requires both the private sector, by the way. I'm not saying that it is the government's responsibility alone. It is the private sector also which needs to get involved to upskill its talent so that we are able to withstand the AI challenge.
I want to talk about the FTA bit, because look at the number of FTAs that we've signed. I was looking at some data. India has actually signed the maximum number of FTAs in the last 1 year, 5. You take New Zealand, UK, EU, a couple of others. We're actually at 5 FTAs. No other country in the world has done it. But that's only a job half done or quarter done, if we are looking at those statistics. How do we then ensure that the gateways that are being opened up for Indian industry actually lead to that kind of, tapping of that potential? Any thoughts there? And then I get in, Ranu, on that.
I'll be very brief. I think to my mind, I think it's got to do with the fact that if you look at FTAs, we are saying that labor-intensive sectors are the ones which are going to benefit from the FTAs. The question is, do the labor-intensive sectors, which are most of it is in the MSME segment or, the medium-term segment, do they even know how to leverage the FTAs? What kind of facilitation has been done and what kind of facilitation can be done by the government and state governments and by trade facilitating units to make them leverage the FTAs in the first place? How do I export more? How do I enhance the volumes? I think that's the one big thing.
I think the FTA part is the as Sanjeev said, is the first part. I think what needs to be done in my mind is that we need to have a very, very close and coordinated movement between the government and the private sector. We need to have a list of 5 key problems which we want to solve over the next 10 years. And that should not be just be available with some minister in the government. It should be available to every citizen. If you wake up that citizen in the middle of the night and say, what are the top priorities for you as a country in the next 5 years? They should say that's the priority. Whether it is energy interdependence, whether it is independence, or it is sovereign manufacturing, right? We've had a case where we actually were lower in industrialization than a lot of our Southeast Asian counterparts, whether it is Vietnam. Now there is time for us to industrialize our country because people have realized that whether it is defense, whether it is your people who have to be skilled, manufacturing is at the core of it. So in my mind, what has to be done is the government has to lead the way. For instance, now they've taken the way in space, they've taken some efforts on the deep tech side. It needs to be supported in a wholehearted way and in an ecosystem way. Just putting some venture capital at work to a problem will not solve it. Putting 10 entrepreneurs to work on a problem will not solve it. The government needs to have a longer term. There are things which the government only can do, which the private sector cannot do. But the government has to literally, like happens in the US, they have to literally get the entrepreneurs and sit them down and say, this is what we are going to do in the next 10 years. We want you to put capital behind it. And I think that's how our country will be able to progress and do well. I think FTA to me is something which I think, one, it was pending for a long time. These FTAs were being discussed over decades. And so it's not unusual that the tariff issue faced us all to come and have a realistic view on what our arrangement should be with the other countries and sort it out. But I think the way out is to actually look at those problem areas, whether it is supply chain. Today the whole supply chain risk issues are very big issues. So all of those have to be pointed as problems and solved for.
Okay, that's an important point. So we have about final 5 odd minutes left in the session, and I'm going to then have a rapid fire round. What's a television journalist if he doesn't talk about rapid fire questions? And so quick questions, quick answers. So let me start with you first. Nifty at the end of the year, higher or lower?
I don't know.
I don't know is not an option. Okay.
If anyone knows, I'll be happy to take consultancy from him or her.
Fair enough, yes. Sanjeev, to you.
I think it'll be higher. I would think so. There are a lot of positive developments ahead of us, and considering the sentiment today is a bit muted, I would hope it is higher.
Okay. Yes.
Higher. We can't go lower than this.
Fair enough. Okay. One sector you would buy and hold for a decade.
Precision engineering.
Okay, that's an important point. Everybody, please take notes. Yes.
Advanced manufacturing, which includes precision manufacturing, absolutely. I think that's what I would do as well.
Advanced manufacturing, contract research and development in pharma, great sector for the next 10 years.
One sector you wouldn't touch.
Where governance is poor.
I think it has to be, governance is poor is certainly, I would say something which is purely based on Indian consumerism. I think, and which is where governance issues also come in, not too sanguine on those.
Okay.
I'm going to provoke the group a little bit and say IT services. It's a very tricky, very challenging sector, a lot of headwinds, and they have to come up with a plan.
Yes, wherever Donald Trump is involved, there's always enough and more headwinds. That's just one of those reasons. Yes. FIIs over the next 12 months, net buyers or net sellers?
Net buyers.
I expect the same.
Net
There'll be
buyers.
net buyers.
Net buyers.
Okay, yes, there's a consensus coming in the panel. Okay, private credit in India, opportunity or bubble forming?
Opportunity.
Okay.
It's an opportunity, but I think we have to be very, very cautious. We don't want a situation like the US. I think it's a great opportunity, but we need the right fund managers doing it. Of course, Nilesh Bhai does that very, very admirably, but we need people like him to do it. Otherwise, it could be a problem.
Huge opportunity. We are, as compared to US, we are way too small in private credit. We are just a blip. So we have a long way to go.
The retail SIP investor 5 years out, rewarded or disappointed?
Undoubtedly rewarded.
I mean, it's hard for me to say, but I'll go with what Nilesh Bhai is saying. If he is saying they will be rewarded, amen.
I think rewarded, but I'm not sure of the size of the reward.
Okay, that's a fair point. Okay. One word for India's smart money right now: fearful, disciplined, or greedy?
Always discipline.
I think disciplined.
I think I would say fearful at the moment.
So this is a fill in the blank. The biggest mistake investors are making in India today is?
I'll say it in Gujarati and then convert it into English. ऊपर में लेते हैं, नीचे में बेचते, यही गलती करते हैं.
Yeah, it's effectively the same. Stopping your investments and stuff like that. I mean, shows lack of conviction about the country, etc. I mean,
yeah, I mean, it's a game where you are at it all the time. So I would say investors should be just at it.
Final question. With the war now out, there is now expectation of oil falling as well. Do you see India's market having some sort of a re-rating, or are we maxed out?
Valuation wise, I think re-rating in the near term looks difficult. Earnings growth will drive the return.
yeah, I think I would agree with Nilesh Bhai, except that I do believe that it will really depend on countries like China, because the biggest consumers of energy and oil will be the ones which will determine the future trajectory, to my mind.
I think energy part people will forget after 6 months. Oil prices people will forget. So as Nilesh Bhai is saying, you have to look at other things.
I save the best for last. Rupee at the end of the year.
It will exist.
That's your cue. That's your cue, everyone. What about?
Well, I mean, I think it's depreciated quite a bit. I think, considering that I was optimistic earlier, I would think it should not be falling significantly from here onwards.
It'll miss the century, and I'm happy it'll miss the century.
Okay, it will exist. It will exist below 100. So I think that pretty much sums it up. It was a fantastic discussion. Thank you so much, all of you. We've covered every ground, and you know where smart money is headed. And you heard it from the smart investors where it's going to go. Thank you so much for being part of this session.
Since we have 17 seconds left, can I make one comment on FTA?
Yes.
India seriously needs a ministry for ease of doing business with James Bond kind of license to kill every single regulation which restricts our entrepreneurs.
We need that minister to do that. Yes. Thank you so much. Thank you.
What an interesting session on public markets and private bets. A big thank you, Mr. Nilesh Shah, Mr. Sanjeev Krishan, Mr. Ranu Vohra, and of course, Ms. Gaurie Dwivedi for bringing the best out of each one of them. Can we have you together for a group photograph, please? And while we do that, I would like to request Mr. Sunil Kant Munjal to please join us on stage and present a small token of appreciation to all our speakers. Thank you so much, Mr. Munjal, for doing the honors. Thank you once again to all the speakers. And before we go any further, we would like to extend our gratitude towards Soreen Investments, our partner for the session, Public Markets, Private Bets. We truly value your contribution in making this session possible. And with that, ladies and gentlemen, it's time to refuel. We have soaked in quite a few learnings since morning. It's time to bond over a lunch break, but we request you to please assemble back at 2:20 p.m. as we would like to kickstart the next leg of the Mind Summit with a very important session which focuses on insurance and how it's cracking the real economics. We'll see you back at 2:20 p.m. Thank you.